Hey, what's going on, guys? Welcome back to the channel. Super excited to bring you this content here today. In this video, we're going to be talking about a number of different things. Number one, we're going to be talking about a brand new addition to my dividend investing portfolio, talk about my principles behind it, why I made this investment, where I see it headed in the future. Now, number two, we're going to be talking about more of a general message to some of you newer investors out there. A lot of people who watch this channel maybe just started investing within the past 2 years, and oftentimes in the past few months is what I'm seeing for newer investors on this channel. So there is a lot that's been going on, tons of volatility. Maybe you're not getting the return you want to see. Well, this is a really great video for you. So without further ado, let's jump right in. All right, listen, if you guys are brand new to the channel, just coming here for the first time, well, I want to say welcome. My name is Dalton. This is D-Lits TV, and on this channel, we talk about all things investing. And there has been so much going on in the stock market, especially attracting new investors. And what I mean by that is, if you look at the stock market about a year ago, back in March of 2020, there were a lot of new investors coming to the market. Now, why was that the case? Well, there were a lot of new investors because prices on the stock market were so low that pretty much if you had invested back in March of 2020, you look at that investment now, if you were making a solid investment into a solid company, chances are you'd be significantly up on that investment. You'd be looking really good right now. So if you got in back in 2020, March, you're looking decent as an investor right now. Your returns are probably pretty solid. Now, what's happening now with new investors is we've seen a lot of people get interested in the stock market as sort of like a get rich quick type of thing. Now, that's not the right way in my mind to look at investing. That's more speculative. That's more gambling. But what we've seen are some of these meme stocks that just absolutely skyrocket. Some people make millions and millions of dollars, and seeing that story entices a lot of new young investors to come into the stock market without the right principles and start flinging their money into the market and actually losing a bunch of money. So me personally, I sit out on those. I've seen AMC go up. I've seen GameStop go up. I've seen this whole Dogecoin craze. I tend to sit on the sidelines. I like these companies to prove themselves on Wall Street, actually have some solid backing financially to their company, and understand that, you know what, investing is more of a longer term gain. Now, that's not to say that it's not getting clouded, right? These people are coming in thinking they can make a quick dollar from the stock market. And to be honest, that really sucks, because what happens is they don't take the time to get down the fundamentals of investing. Now, the fact of the matter is, it's pretty straightforward. Investing is not that hard if you have a long-term mindset. Now, on average, if you're investing in some solid ETFs, you can get a return of around, 7 to 10% on the stock market annually. It's not hard to do, but these people come in and they think that they can turn, a few $100s into tens of thousands of dollars and make a lot of money that way. And I just wish that instead of doing that, if they just put in a little bit more legwork up front, they'd be in a much better spot. And that's where I guess my portfolio and my kind of thinking behind investing comes into play. There's a lot that I do that's I guess not typical of younger investors. I tend to invest in long-term dividend paying companies. Now, there is a growth portfolio that I hold as well. It's not my emphasis. It's not where I've made the most money. I've definitely got the highest returns from my dividend portfolio. And so that's why that's honestly just my favorite method. That and the idea of generating passive income and continuing to build the passive income stream and watching the dividend snowball grow, it's just so rewarding in itself. So that's just kind of what I wanted to say out there. Now, I hope that in a video like this, maybe you're not getting that return, right? Maybe you are looking in the negative, and there's a lot of other YouTubers out there, a lot of finance YouTubers, and you look at their portfolio, and over the past few months, they're not looking great. Well, it's interesting because on my portfolio, I'm actually doing relatively well, right? I'm in the green. My portfolio has been making money. On top of the gains that I'm getting on the stock market, I'm also getting gains in dividend income. And as those dividends are being paid to me, I'm just reinvesting them back into those same companies and making that next dividend payment even higher. So I'm just watching it grow. It's been a really exciting time for me. And though the market has been volatile, it's been crazy. My growth portfolio is down way more. I think it's down 10%. but my dividend portfolio has been doing really well, and that's what I like to focus on and talk about on this channel. Now, let me talk about the investment that I actually did make. I'm just going to pop open my Robinhood portfolio here, and on the screen, you should be able to see it right here. This is Walgreens. Walgreens is one that I've been watching for a while. When it comes to dividend investing, there's just a few companies out there that are actually really, really solid. There's one place that I start to look for new dividend investments. I'll talk about that in a few minutes, but I just want to show you my position. I like to share exactly when I buy these stocks, exactly when I actually put my money into the stock market. Some people will just talk about their investments. They won't actually show you that they bought into them. This one, I put around $500 in, got 10 shares of Walgreens, and there's a number of different reasons why I thought this would be a solid investment for me. One thing to note is that if you look at them over the past year, we're close to 52-week high. If you look at the 52-week high, it's around $56.80. Now, you might be looking at it, you're a little bit worried. You're like, ooh, got in close to that 52-week high. How do you feel about that? Well, actually pretty good. If you look at my portfolio and some of the returns I've got, let me just scroll up here to this SPHD. Look at this 5-year chart, right? If you had invested from, let's say July to let's say February, July 2016 to February 2020, this entire thing would have only rose about 8%. It's relatively stable. It's a pretty stagnant investment. It's just, you can see it trading horizontally. What happens here is you can't really capitalize on a huge market gain there. This is an ETF that pays solid dividends. You got these nice dividends rolling in. You can reinvest them. You can grow that way, but not a ton of money to be made on the overall market here. Well, if you look at this huge dip here, this is where obviously you want to start investing into something like this. That's exactly what I did. So in 5 years, you wouldn't have been able to get around an 8% return. But in a few months, I'm looking at around a 20% return on this. Something that people said I was crazy for investing in during the time that I was actually investing in this, getting a solid return on it. I guess what I'm trying to drill home there is that now that I'm getting into Walgreens at these prices, I'm not too worried about it. At the very least, if this drops, I'm just going to be buying more, adding on to that position, bolstering it up, and being able to return more money once the stock turns around even further. Looking at the 5-year chart, it's not looking great. They're in some sort of recovery down here, looking decent off this bounce. We'll see if that continues. But there are a number of different reasons and why I invested in Walgreens and how I actually identified them. Now, you might be wondering, how did I actually identify the Walgreens stock? Well, this is one of my favorite websites. This is the Shore Dividend website. What you get on this website is a number of different lists that you can utilize to help figure out some potential investments for the future. This is one of my favorite ones where you can look at dividend aristocrats or dividend kings. You can see dividend aristocrats in focus. Walgreens Boost Alliance is the title for this one. Now, dividend aristocrat, this means that they've been increasing their dividend payment for around 25 years consecutively. If they are a dividend king, it's around 50 years consecutively. Walgreens has been increasing their dividend payment for around, I believe, 46 years. So it's been really solid for growth. Looking at some of the great things this website has to offer, you can see some things like their business overview, which tells you exactly how the company operates, what industry they're in, what they actually do. You can see there's 450,000 people, more than 21,000 stores. There's a lot going on for them. They're huge. I believe they also started acquiring a bunch of physical locations from Rite Aid, I want to say. So if I scroll down here, you can see industry, I guess, news, what's going on in the industry, how their sales are looking. You can see their pharmacy sales here, their prescriptions, how they're actually generating revenue, and things are looking pretty solid for this. Now, you can keep on scrolling down. What I like, this is one of my favorite sections, looking at the growth prospects here. Where do you see the most growth in these companies? Well, here it is right here. So as we discussed above, the Rite Aid transaction has already helped Walgreens grow earnings. You can see Walgreens had acquired over 1,900 Rite Aid stores and 3 distribution centers and related inventory for around $4.375 billion. So they've been able to capitalize on a lot from this purchase. And, there's a lot of growth potential here in the future. Now, I think that their earnings, they're trading around 10.9% of their price to earnings ratio. Let me scroll down. I think it'll talk about it here. As I go down right here, you can see that as a result, the stock trades for a price to earnings ratio of 10.9. Now, Walgreens typically trades around 15 for a price to earnings ratio. So there's a lot of potential to be made in terms of growth in that avenue. Now, when you look at something like Walgreens, you got to look at some of their competitors, what the overall landscape is looking like for the market. So one of their big ones is actually CVS. So if you look at CVS right here, you can see this is their chart over the past 5 years. They've been similarly on that decline. One of the big disrupting forces that may come to the pharmaceutical industry is within Amazon. Amazon's huge. They're trying to get in the pharmaceutical industry, but luckily that's not the only area that Walgreens is producing revenue or income from. They offer a variety of different services. Not only do they have their own brand for some of the over-the-counter stuff that they're doing, a lot of the stuff that they have in their retail physical location, but they just offer a ton of different diversification with their own products and their own line. So really excited to see where this heads in the future. A lot of great stuff from this. Again, this is just surface level stuff that I go over. This is just kind of how I go about some of the investments that I'm making. So if you guys have any questions along the way, make sure you leave it in the comment section down below. Hopefully, if you watched a video like this, you're going to feel a little bit more confident in some of your investments. You're going to be able to start thinking differently about how you may go about investing. And at the end of the day, thank you so much for checking out this video, guys, and have a great day.